What if I told you my mortgage payment hasn't changed in 16 years, but my neighbor's rent has doubled? This is not a projection. This is 16 years of real numbers. Maybe this is why Warren Buffett calls a 30-year mortgage a one-way bet. You see, I ran the actual math on my own house, and I'm going to show you why I'm never selling. If you enjoy content like this, let me know by leaving a like. And if you know of someone else who would enjoy this content, please share it with them. And drop any questions you might have down in the comments. Okay, $249,600 in mortgage payments versus $326,400 in rental payments. Same 16 years, same neighborhood. I'll explain the calculations behind those numbers in a second. But first, let me explain some of my background and what brought me here. See, when I was younger, I remember living in a household where money, the subject of money, was a source of constant stress. I swore when I was an adult I would grow up and not have money problems. And I decided at age 11, after picking up a book on real estate investing, that real estate investing was going to be my path to financial freedom and independence. Fast forward to when I was 17 years old, and I had saved up a bunch of money from working, and I had $3,500, and I started dabbling in stocks and options and started writing covered calls. But then the dot-com bubble burst, and I lost all my profits and my seed money. Then fast forward from there, at age 22, I decided to start building spec homes and selling them for a profit, thinking that that was going to be my way to build up seed money. But then the 2007 real estate crash hit, and I gave back all my profits. Luckily, I didn't have to file for bankruptcy or anything. I just lost the money that I had gained. And then in 2010, I decided house hacking was going to be my entry into real estate rentals. And so I bought a duplex, lived in one side, and rented out the other while I was fixing the entire duplex up. This third strategy, while slow and kind of boring, ended up being my best investment. Now, it didn't make me a millionaire, but it did pay me a return every month for 16 years, even if it was only a little. And here's something that's not talked about enough. Let me tell you a little open secret about the Federal Reserve. The Federal Reserve is actually a homeowner's best friend. You see, the Federal Reserve has a target inflation rate of 2% per year. That's not a conspiracy. That's stated policy. That's their target rate. That means in 10 years, the Federal Reserve intends for your house that you own to rise in value by 20%, 2% per year. 20% by inflation alone, not considering any of the other returns. You see, inflation is normally framed as a villain to your finances, but if you position yourself correctly, it's actually kind of your friend. You see this? In 2010, a $5 bill would pay for 2 coffees. Fast forward to 2026, and a $5 bill will barely pay for 1 coffee at your local Starbucks. You see, your fixed rate mortgage payment from 2010 never got that memo about your money slowly being worth less and less via inflation. You see, the fixed rate mortgage acts as a hedge. Your payment is locked in today's dollars, but you keep earning and paying in tomorrow's cheaper and cheaper dollars. See, Warren Buffett described the 30-year mortgage as one of the most attractive tools available to your average homeowner, since a borrower can refinance if rates fall, but if rates rise, the homeowner's mortgage payment remains static. He calls this a one-way bet. It's one way because ultimately, no matter what happens, the homeowner wins. In the early 1980s, mortgage rates rose to around 18%, which is crazy. But then they slowly began to drop till around the pandemic, they were hovering around 3%. And homeowners who had locked in high rates simply refinanced down. Renters never got this advantage. They never got this lifeboat. So I'm not going to give you a hypothetical. I'll actually give you my real property numbers. See, in 2010, I obtained a fixed rate mortgage payment at around $1,300 a month. Now, I've since refinanced for a lower rate, but if nothing had changed, then ultimately $1,300 a month for 192 months equals $249,600 paid out. Now here's a part that should make you a little angry on behalf of every renter that you know. A comparable rental unit next door at the time started out at $1,100 a month, and now it's floating around $2,300 a month. Remember, this is a comparable rental. Now, if you average out the $1,100 and the $2,300 for 192 months or 16 years, that averages out to $1,700 a month, which brings us to a total of $326,400 paid out from the renter, who will never own a single brick of that unit. That's a gap of $76,800 more paid by the renter for the exact same 16 years. And again, at the end of that, the renter will own nothing of that unit, while I own the property outright-ish, if you don't count the remaining loan balance. And that's before we even talk about appreciation. That's just the monthly bill. Most people are taught that debt is scary, and for good reason. Debt is like a loaded gun. You can use it to feed your family, or you can use it to shoot yourself in the foot. However, the investors who are interested in building generational wealth look at fixed rate, debt specifically, fixed rate. They look at that a little bit different. Ken McElroy has made a career out of this exact argument. When investors lock in payments at a fixed rate, inflation gradually shrinks the cost of a $200,000 loan over time, even as rents and property values keep growing. Ken calls this a hidden wealth creator. It's not even that the house necessarily went up in value. It's just that the debt was quietly destroyed by inflation over time. Michael Zuber, who built a 187-unit portfolio, one rental at a time, preaches the unsexy version of this. Buy right, hold, don't touch the equity, let time do the work. And he too came to this conclusion after losing everything. Look up his story sometime. It's worth listening to or reading. Now, you don't need 187 units. You just need one multifamily unit that you can grow into and pay off. That's the whole house hack pitch. It's just what Ken McElroy and what Michael Zuber did, but scaled down. Now, value investors like Warren Buffett and Charlie Munger have long argued for buying assets that have what they call pricing power. That means buying assets that people will always need, like shelter. It's one of the few things that you can hold through every economic storm, because people have to have it. Now, I know what some of you may be thinking already, so let's kill the three primary objections that you may have in your head right now. There are people who argue, yeah, but renting offers more flexibility. It doesn't tie you down to that property or to an area. And this is a fair argument, but you just saw that flexibility has a price. In this case, it's $77,000 over 16 years. Others will say, yeah, but what about maintenance and taxes and insurance? These are very real costs on top of your mortgage payment. But remember, those costs are layered on top of a payment that's static and frozen in place. As utilities and taxes become more expensive, landlords just slowly increase rent to pay for such costs. Now, there are other people that are going to say, yeah, but rates are super high right now. I don't want to buy. And again, this is a fair statement. The point I'm making isn't buy at any price. Of course not. The point is the underlying mechanics of buying versus renting. The mechanics of inflation versus a fixed number doesn't change with the rate environment. High rates just change the entry price. And finally, I know there's naysayers out there that are going to say, look, but the market could crash. And that's always a concern. That's a real concern. But what's the probability of it? Life is all about probabilities. It can definitely happen. You can get wiped out. I've been wiped out before. But if you buy and hold long term, it doesn't really matter because you're buying for cash flow. So my mortgage hasn't moved in 16 years, while my neighbor's rent has doubled. And that's why I'm never selling. And for the kid who just wanted his family to stop stressing about money, it turns out that the answer wasn't a hot stock tip. It was a boring house hack. Held long enough for math and time to do the rest. If you want to know the story of how I got into my first rental with very little money, go ahead and check out this video here. And thanks for hanging out with me. I'll see you next time.